Greetings, fellow traders, and welcome to this MACD presentation. For those of you who are familiar with MACD, it stands for the Moving Average Convergence Divergence. And I'm going to tell you all about the MACD, probably a little bit more than you even care to know, but get you comfortable with it so you know how to utilize it in your trading and to make your trading more successful by learning all about this great tool. MACD defined. Number one, what is the MACD? What does it mean? How does it work? First of all, I want to give you just a little bit of history on it. The MACD was developed by Gerald Apple in the late 1970s. The Moving Average Convergence Divergence Oscillator, or MACD, is one of the most effective momentum indicators available. What's cool about it is the MACD turns two trend-following indicators, the moving averages, into a momentum oscillator by subtracting the longer moving average from the shorter moving average. Now, before you get all confused and think this is a little bit overkill, I want you just to take a step back and look at the next few things I'm going to explain, and it'll make a lot more sense. MACD therefore offers the best of both worlds, trend following and momentum. Those are the two things that we're after in the forex trading world. The MACD fluctuates above and below the zero line as the moving averages converge, cross, and diverge. So traders can look for the signal line crossovers, center line crossovers, and divergences to generate signals. Now, there is one thing to note. Because the MACD is unbounded, it is not particularly useful for identifying overbought and oversold levels. So we can't really use it to see when something's overbought or oversold because there is no limit. It'll just stay in the up or the down position. So we have to watch that. And then you can add other indicators or oscillators to it to help make it more of a filtered signal. So what are the common first questions that most people have? Here it is. What does MACD look like? And of course, what do the lines mean? So before we talk about it, we want to look at how the MACD looks overall and what the lines mean. Now, there's one really important point to bring up. When I trade personally in Forex, I use MetaTrader 4. MetaTrader 4 has different MACD settings and appearances than some of the other websites like TradingView. You can get indicators and oscillators put into your MetaTrader 4 to make them look similar, meaning they have more lines or less lines. So don't be confused by that. I'm going to show you a few examples of what I mean here. This is basically how the MACD looks. And I know this looks like a lot of information, but I want you just to take a step back and I'll show you exactly what I mean. Here you can see the MACD histogram. That's the gray area that has highs and lows and has this black line at the base. The base of this histogram, where it goes up and go down, the middle, is called the zero line. And that's important to know as we go a little bit further in this presentation. The blue line here is the MACD line. And the MACD line is basically the 12-period EMA, and that stands for exponential moving average, minus the 26-period EMA. Now, the cool thing about learning how to use this MACD is you don't need to understand all this exactly. But I want you to at least sort of know where it's coming from, because the more you understand these things, the better your trading can be. So the blue line in this picture anyway, because we can make them any color we want, is the MACD line. The red line is the signal line, the MACD signal line. This is actually a 9-period EMA of the MACD. So this one, the signal line, this one is the slower moving line, and it is actually the 9-period EMA of the actual MACD line. Okay, so we have the MACD histogram, we have the MACD line, and the signal line. So the way that this indicator really works is the 12-period EMA crosses over or below the 26-period EMA on the chart. Then the MACD crosses below or over the zero line. So when these moving averages on your chart cross, and again, you don't even have to have them on your chart because the MACD and the input from that actually assumes and knows that information already. So you don't have to use the 12 and 26 moving average on your chart if you don't want, and you can still have the MACD. But basically, when the MACD line crosses the zero line, as you can see by these black arrows here, when it crosses above, that means the moving averages are crossing upwards. And when it crosses this blue line, the MACD line, crosses below the zero line, then we have the cross to the downside here on the chart. So the whole point of using the MACD is to try to predict the market or make an extra filter, an extra verification step in your technical analysis to say, yes, I'm correct on selling, or I'm correct on buying, shorting, or going long in the market. So this is a great image. I'm going to keep it up here in the corner here on this next presentation slide so you get a better idea. So there are 3 signals that you get from the MACD. The MACD is really good for identifying these 3, and here they are. We have signal line crossovers, we have zero line crossovers, and divergence. So let's just do a brief overview on them. Now, this is sort of a rule of bad PowerPoint, if you will. You're not supposed to put this much information up here, but it's so tricky to someone who's not comfortable with it. I felt like the only way to really let this sink in is for you to read it, maybe read it a couple times. You can pause the video and take a look at, getting a better hang of what these actual descriptions mean. So as you can see here, a single line crossover is the most common signal produced by the MACD. First, one must consider that the signal line is essentially an indicator of an indicator, and we just talked about that. It's actually the 9-period EMA of the MACD line. The signal line is calculating the moving average of the MACD line. Therefore, the signal line lags behind the MACD line. The MACD is the leading line in the two. That being said, on the occasion where the MACD line crosses above or below the signal line, that can signify a potentially strong move. So that is called a signal line crossover, and that can be an indicator to buy or sell a currency pair or a stock or a commodity, whatever you're trading. Next is the zero line crossover. This is very similar to the premise of the signal line crossover, but instead of crossing the signal line, the zero line crossover occurs when the MACD line crosses the zero line to either become positive or negative. So if it crosses above zero, it's positive. If it crosses below, it's negative. And you can see on the bottom here picture, and we talked about that already, when that MACD line crosses above or below this middle zero line, that's when the moving average is actually crossed on the chart. Now, the third one is my most favorite, and I think the best one out there, and that is divergence. When I trade divergence, sometimes I have the best trades I've had for a long time. So here's how it works. Divergence is another signal created by the MACD. Simply put, divergence is when the MACD and the actual price action on your chart, not an indicator or oscillator, actual price, are not in agreement. So I want to make sure you understand the signal line crossover can be a signal to buy or sell. The zero line crossover can also be a signal, also a filter to make sure you have even more information supporting your decision. And what I like to trade the most personally is divergence. So I'm going to show you some examples of those next. This is the chart of the Australian US dollar on the daily time frame. This is something that I found online that I've looked at a long time ago, and I just wanted to give you to share it with you so you have a little bit better idea of how the MACD works. So you can see here that when the MACD, that's this blue line, is beneath the zero line on the histogram, that we're actually in a downtrend, right? So the MACD line, doesn't matter if it's going up or down, we're in a downtrend. When the MACD, the blue line, is above this middle line of the histogram, the zero line we call it, we're in an uptrend. And when it crosses down below again, we're in a downtrend. So very simple. MACD lower than zero, we're in a downtrend. MACD greater than zero, uptrend. MACD less than zero, downtrend. So that's all about this blue line. Now again, be careful because the blue line can be any color. You can set it to whatever you want. But in this example, that's what I think is the easiest way to look at. The red line here is a signal line. Next, I wanted to show you a sample of the MACD for MetaTrader 4. Remember just a little while ago, I was discussing how the MetaTrader 4 basic MACD doesn't look exactly like the old-fashioned MACD. Some call it the old school or the early one, and then there's a newer one. But if you look down here, and I'll try to zoom in here a little bit for you, you see the MACD histogram here. And then you also see this line, and the line is basically combined together. So we still have the 12.26.9, the standard MACD, but we're looking for crossovers of the histogram with this line. We also still have the zero line. Everything's the same. There's just one less line here. So to make it consistent and more precise, I'm going to continue to use some more examples from the two-line theory or way to use the MACD. So I put this slide together from TradingView charts, which I also use in addition to MetaTrader 4. And here, what I did is I made the blue line, the MACD line, the orange line, the signal line, and the pink, the histogram. And the middle of this histogram, where it goes up and down, that's the zero line. So when this MACD line is below the 0, we're in a downtrend. Even though we turned up, we're still in a downtrend because we're below the middle line here, right? Here it peaked up again, but then it continued down. So your signals to buy or sell can be when the signal line crosses the MACD line. It can also be when the MACD line crosses the 0 line. Or my favorite, divergence, when price action does not go the same direction as the histogram here. And I'm going to show you some really great examples about how to use that. So again, I know this is a little bit confusing. A lot of traders use MACD. It's probably one of the most, if not the most common indicator oscillator that's on the market here that we've used for years. But sometimes it's a little tricky to learn how to use it and what it really means. So that's why I put this together for you. Here's another sample from the TradingView charts. This is the Euro, Great British Pound, the 4-hour time frame. And I put a little note down here. It says downside momentum is stronger than upside momentum as long as the MACD is negative. And we talked about that already. This blue line, as long as it's below this 0 line, we still are in a downtrend. Now, changing time frames will change everything, so you have to decide what you're looking at, right? So you can see the Euro Pound is moving down. I did put the 12 and 26 moving averages up here just to give you a better idea of where things are at. But you don't even have to use those moving averages. When the MACD is below the 0 line, we are in a downtrend. And that's just the way it works. So again, I wanted to show you this. This is the sort of a beautiful, clean chart on using the MACD with the signal line and the MACD line on the Great British Pound 4-hour time frame. Next is just another sample, the same pair, Euro Pound, but a 30-minute time frame. I thought this was a good one to share with you because you can see this large drop and then the raise, and you can see that there was actually a MACD crossing the signal line back here before we had the moving averages crossed. And it's interesting because this can be a leading indicator at times. So we have the 0 line flat, the histogram basically flat. We have the MACD and signal line crossing right near the bottom of price action. We all know the trick with the moving average crossing as being a good way to trade is that the price action is usually far away. For example, where these two moving averages crossed, you can't say buy here because the price is already way up here, right? So the nice thing about the MACD is you can use it to help you predict a little bit more in advance of which way the pair may move. We can also see when the MACD or the blue line crosses over the 0 line here on the histogram and it continues upwards, that this trend continues upwards on the Euro Pound. Since we're still above the 0 line at the end, even though the MACD line and the signal line are coming down, we still assume an uptrend, at least on this 30-minute time frame. Next, I wanted to show you how to use MACD for trading divergence, one of my favorite ways to trade, especially in counter trend trading. So there's so much to tell you. I'm going to have an entire overview, an entire review or course or hour-long presentation on just trading divergence. But I just want to get you touched on this because this is one of those 3 signals you can get from the MACD to trade, and sometimes, at least for me, become the most low-risk, high-reward trade setups that are out there today. These are some examples from the past. Some of them are better than others. So again, this is the Euro USD on the 1-minute time frame. Here we have price making a slightly higher high, but you can see the MACD histogram here at the bottom, not even coming close to being a higher high or even level. So we have divergence of these two. And we like to think that the MACD will lead price action, meaning it's lower. Now, I do often use a filter with stochastics. I like to get stochastics off also in the top or the bottom area as a third filter, but you don't have to use that. This can be strictly done off of MACD. But we also see stochastics was in the overbought category, so it's a great time to sell. And I will teach you in future videos how to use Fibonacci extension to project your targets. But basically, this MACD divergence was the way that I got in this trade. This trade is on a little bit longer time frame. I think this is a 5-minute. But as you can see here, it's just a beautiful MACD divergence. Everything matched up perfectly. We had higher highs on the actual price action, but we had lower lows on the MACD histogram, and we even had the stochastics in the overbought area. You can have this overbought area at 70 or 80, and this isn't to teach you about stochastics. This presentation is strictly based on MACD, but there are other ways to filter through the MACD divergence, and stochastics is one way that I use personally. So what I do then is I bring my swing low to swing high Fibonacci tool, and I can make projections of the 100 level, the 161.8, and then I move my my stops down, and I can teach you that whole strategy in another video. But this is a great example of MACD divergence. One of the most powerful reasons that MACD divergence trading can make you a lot of money is if this price goes much higher, you're already hitting your stop. In other words, you know if you're wrong very quickly after getting into a trade, and your potential reward is usually much greater than 1-to-1. A lot of times it's 2, 3, even 4-to-1. So you can be wrong most of the time and still come ahead if you let your winners hit your take profit level. It's not easy to do. So if you're starting to do this and want to learn how to trade divergence using MACD, definitely always start in a demo account. And if you're in a live money account, trade the smallest amount of risk that you can until you become comfortable with it. One of the reasons that I always give people a little bit of caution when you're trading divergence is there's so many other factors. And I will touch on that here at the end of these few slides about looking at the news and looking at longer time frames. So stick around to the end and I'll give you a little bit better summary here as well. Just another example or two to go. This is the pound US dollar. Again, this is a really short time frame, but I wanted to show you the example. This can look exactly the same on the daily, weekly, monthly, but we have higher highs, we have lower lows on the MACD, we have stochastics and overbought area. I use a Fibonacci tool from swing low to the high. We hit our projections all the way out past 161.8, and it's interesting. My targets are usually the 100 level, which is usually the swing low if we look left. And then the 161.8 is level 2. 261.8 is level 3. Now, most times we don't get there, but it's really interesting how the Fibonacci levels work, right? I mean, we bounce 4 or 5 times at that exact level before coming off. So really interesting when you can tie Fibonacci, stochastics, MACD, divergence, and everything together. You can have some great trading. You can generate a lot of trades. You can have a tight stop on these trades. It's one of my most exciting ways to trade. This one you may have seen before if you've ever followed me on the Forex markets. This is actually what I call my triple top crown trade. It's a 1-minute time frame again on the pound dollar. And you can see a beautiful triple top. I mean, it's almost exact levels, slightly higher in the middle, hence the crown. And you can see the MACD down at the bottom here, lower, 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 and lower. Stochastics were in overbought category. A great time to get short. If you picked up on this first one and your stop was above the swing, you're still safe, you're ready to go, and you're in profit right away. I mean, and this is a pretty sizable move. If you look to the right, we're at just about 1.45, and this is 1.4440. So we're talking about a 60 pip move here on the 1-minute time frame. So that's where divergence can really let you sort of snipe and get in there and have some great, nice lot sizes with a tight stop. So again, I'm going to talk about this more in a future presentation, but this is MACD divergence to Fibonacci levels. I've been telling you just a baseline of how I do it with my targets at 100 level, the 161.8, the 261.8, and the 423.6, which is really hard to get to. This is a trade I took on the Euro Yen way back. I think this was a couple of years ago or so, but just a beautiful trade. We had lower lows coming in on the price action, lower lows, but we had MACD making higher highs. We finally got our stochastics just stuffed down in the oversold category. We put the trade in, we put our stops below the swing lows. We got in profit right away. We used our Fibonacci projection tool to set up target 1. It came right up to target 1 at the 161.8, hovered right there. We moved our stops up and it jumped right up to the 261.8 level. And check this out. This is the really cool part. Once it was at the 261.8, now we had to sit here for a while, right? This trade had been going on for a while, but it stepped right up to the 423.6, just pierced enough to hit our take profit on our full pull. We actually call this a full pull when it goes all the way to the 423.6, because it's not that common to get all the way there, and we were out of the trade. So you can decide if you want to take a third of it off at the first level, a third at the next level. You could take 2/3 off sooner, let one run. You could get out and get back in, but it's all based on this entry and on the divergence on the MACD here at the bottom. So this was 169 pips total. This is probably one of the most beautiful trades I've ever taken with MACD divergence using the Fibonacci projections all the way up to the 423.6 fib extension from the swing high to swing low, where we based our entry on the MACD divergence. So this one had everything. These don't happen all the time, but this is the reason I want to share this with you, is when it happens, it's just a beautiful thing. And it almost seems a little eerie at how attracted the price is to those fib levels. So of course, when you're trading, you want to be always looking at the longer term, hopefully going with the trend, watching the other yen pairs. If you're in the euro yen here, checking out the euro. I mean, there's a lot more to it than just this, but it's great when it works out like that. So I want to close up this presentation by just showing you a few little tips here. My favorite currency pairs to trade. I really like trading the Euro USD, the Euro Aussie, the Aussie dollar, the Euro pound. I also really like dollar yen, pound yen, euro yen. Who doesn't like those, right? And I also trade gold and a little bit of silver. US dollar CAD is sort of my nemesis. I can do well with it at times, but sometimes not as well. But these are the pairs that I trade. I mean, some of these are major, some are a little bit more exotic, some of the commodities in there as well. But that's what I like to trade. And really, between this little basket, that's pretty much all I know. And in the over 10 years I've been trading forex now, depends when you're watching this video. But this is really where I've done probably 95% of my trading. So we could even narrow it down to probably my favorite 3. And that might be 70% of all my trades. So you want to get comfortable with a pair or comfortable with a commodity, whatever you're trading, and really get to know those charts. I think this is a great thing to put in before we close out this presentation on MACD. This has nothing to do with MACD, but it's so important. These are just 6 quick steps that I use in my analysis before placing any trade. Number 1, check news events. You don't want to get caught in a big news event because you didn't know what was going on and you're stopped out and you got some huge, drawdown going on. Always make sure there's not any major news coming out. Number 2 is check the pair's overall bias. You want to look at other correlated pairs. If you're trading the euro dollar, look at the euro pound, look at the euro Aussie, look at those other pairs and see, like the euro yen, see what's going on. And maybe you can pick a better pair for the risk that you want to put on. Number 3 is some simple top-down analysis. Always look at the monthly time frame, the weekly, then the daily, then the 4-hour. Now, if you're trading somewhat actively, say you trade a couple or a few times a day here and there, you don't always need to pull up the weekly and monthly and daily because they haven't changed all day, right? Or even for the week for that matter. But it's good to always know where you're at. And that's why drawing those trend lines and support and resistance areas in advance are great. Number 4 is check correlating pairs. We sort of touch on that. Number 5, one of my favorite, look left for clues. The market leaves clues. Always look to the left to see if we're coming up on support or resistance before putting in a trade. That means zooming out to the longer time frames, shrinking down your candlesticks or your bars a little bit so you can see a little more, and make sure you're not going to be buying or selling right at a support level, for example. Number 6, check the structure. Support and resistance levels, patterns, trend lines, key levels. That's sort of what I've been talking about. So you come up with your trade idea. You analyze, which is what these 6 steps are. Then you decide what you want to do. You calculate your risk and you place your trade and you are off to the races. So this is just a sort of crammed down summary of how I like to trade. The MACD, again, that's what we're talking about here today. A powerful tool to use. A lot of traders use the MACD, and I would encourage you to learn a little bit more. So watch this video again, take some notes, pause it if you want to make some notes about what these levels and numbers mean. The whole point of this video isn't to have you become an expert in MACD in 20 minutes, but it is intended to be there so that if you want to look back later on, you can have this video to look at, make some notes, review it, test it out. Always test things in a demo account or in a very small live account, small risk, and see if it can work for you. Maybe it'd be something great to add to your trading arsenal. That's all I have for now. Thanks for watching, but make sure to check back soon. We're going to have more videos for you in the future. Thanks a lot. Make it a great day.